So for the last 100 years or so, the whole concept of automotive safety has essentially been about building a better cage.
Right.
Like you put people inside a heavy metal box, and then you just try to pad the inside of that box as much as humanly possible.
Yeah, it's fundamentally an environmental approach. You assume the crash is going to happen, right? So you make the environment around the passengers, like the car itself, safer. And by default, the people inside survive.
Right, exactly. But what happens when you take the box away entirely? Like say you're on a motorcycle or, zipping through city traffic on a commuter scooter. Suddenly, that whole traditional playbook for crash safety just goes completely out the window.
It really does. You certainly don't have crumple zones or steel pillars to protect you out there.
No. And you can't exactly put a traditional dashboard airbag on a Vespa.
No, you can't. The physics of the crash are completely different. I mean, the rider isn't enclosed, their trajectory during an impact is totally unpredictable, and, well, there's no steering wheel to house the actual safety device.
Right. Well, the surprising fact that grabbed me today, and what we're going to get into, is that airbags aren't just for car dashboards anymore.
Which is fascinating.
Yeah. Autoliv, they're the world's largest automotive safety supplier. They are now releasing actual wearable airbags.
Yeah.
We were talking about safety tech that you physically put on your body before you ride. And to understand how they're pulling this off, we're doing a deep dive today into their first quarter 2026 earnings report, plus the executive call transcript.
It's a great source to unpack.
It really is.
Yeah.
So whether you're an investor analyzing, supply chain resilience, or someone tracking the auto industry, or just frankly, a driver who wants to know what goes into surviving a crash, we are looking at how this massive global manufacturer navigates shrinking markets, certain geopolitical shocks, and somehow still manages to invent the future of safety.
It's a phenomenal case study in macroeconomic physics, really, because right out of the gate in this Q1 report, you are presented with this massive top-line contradiction.
Total.
The company is growing, but the global sandbox they play in is actively shrinking.
Yeah, let's look at those numbers. Because according to the S&P global data that they referenced in the report, total global car production actually fell. It went down 3.4% in the first quarter.
Right.
So literally fewer cars rolling off assembly lines worldwide.
And that drop, it was largely driven by a 3% decline in China, alongside some notable softness in places like Japan and South Korea. So the global pie of cars being manufactured is undeniably getting smaller.
But here's the contradiction. Autoliv's Q1 sales hit a record $2.75 billion.
Yeah.
That is an increase of about 7% year over year. So they outperformed the global market by over 4 percentage points.
Which is huge.
And in China, where overall production actually fell, Autoliv beat the overall Chinese market by 15 percentage points.
It becomes even more staggering, honestly, when you isolate just the Chinese domestic auto manufacturers.
Unlike BYD and Zeekr.
Exactly. With those specific domestic customers, Autoliv outperformed production by 40 percentage points.
Wait, 40 percentage points?
Yeah. 40%.
I mean, in physical manufacturing, that kind of outperformance is practically unheard of.
Right.
It's not like software where you can just scale up server capacity with a few clicks. They had to physically manufacture, stitch, pack, and deliver 40% more airbags and seatbelts than the underlying production growth of their customers. How do you actually do that when the market itself is contracting?
Well, it comes down to a metric called content per vehicle.
Okay.
Autoliv strategically aligned themselves with the automakers who are gobbling up market share, sure. But more importantly, the specific cars those Chinese domestic brands are building today require vastly more safety content than the models they built, say, 5 years ago.
Oh, I see. So it's kind of like selling smart home security systems. Even if fewer houses are being built this year, if every new house suddenly requires 3 cameras, smart locks, and window sensors, instead of just a basic front door alarm, your sales still explode.
That is the exact mechanism. For example, Autoliv noted a massive uptick in the adoption of front center airbags.
Wait, center airbags? Like between the seats?
Yes, airbags designed to deploy between the driver and the passenger, because in a severe side impact collision, one of the biggest risks is actually the driver and passenger violently colliding with each other.
Oh, wow. I never even thought about that.
Yeah, and as electric vehicles get heavier, those side impacts become more dangerous. So safety standards are evolving to test for those specific injuries. And Chinese automakers are increasingly making these center airbags standard equipment just to achieve 5-star safety ratings.
Right. So even if a factory in Shenzhen is producing slightly fewer cars overall this quarter, The individual cars rolling out the door just have way more Autoliv products physically stuffed into the cabin.
Precisely. It's a brilliant buffer against a shrinking macro environment.
Yeah.
But, a buffer strategy only gets you so far.
Right.
To sustain long-term growth, you still need raw volume. You need a market that is actually building more cars and doing it rapidly.
And that, naturally, brings us to India. Because looking at the transcript, Autoliv's organic sales in India grew by an incredible 38% in the first quarter.
Yeah.
And just to clarify, organic sales meaning this wasn't driven by, like, buying another company or wild currency swings. This is pure core business growth.
Yeah, and India now represents almost 6% of Autoliv's global sales.
Yeah.
To put that in perspective, that is triple what it was just 3 years ago.
Triple. Wow.
Yeah, we are watching a profound geographic shift in their revenue base happen in real time.
Now, to be fair, India's overall light vehicle production did grow, right? Up 6% in the quarter, which management noted was helped by lower purchase taxes on new, smaller vehicles. But again, 6% more cars being built doesn't naturally equal a 38% surge in sales for a parts supplier.
No, it requires a catalyst, and that catalyst is government regulation. Safety content per vehicle in India has increased by roughly 20% annually for the past 2 years.
That's massive. What does that 20% actually look like physically?
Well, it looks like a complete transformation of the baseline vehicle. I mean, historically, a budget car in India might have had 0 airbags. Or maybe just one for the driver.
Right.
But the Indian government has been heavily prioritizing road safety lately. They're mandating dual-front airbags, updating crash test standards, and really pushing towards 6 airbags becoming standard on a lot more models.
Oh, wow.
Yeah, so when a massive government changes its baseline regulations like that, it forces a structural shift in global supply chain investments.
You can see that physical investment literally taking shape in the report, too, because Autoliv now operates 5 manufacturing plants in India, plus a dedicated R&D center, and they employ over 6,000 people there.
Yeah, they are fully committed.
They didn't just ship parts from Europe either. They recently opened a brand new inflator plant to feed both the Indian market and broader Asian demand. They are, like, pouring concrete and localizing the supply chain because government regulation practically guarantees the future demand.
But, localizing supply chains and pouring all that concrete means you are heavily exposed to the realities of physical raw material.
Ah, yes, the costs.
Exactly. And this is where the narrative of the Q1 report shifts pretty violently from the excitement of sales growth to the harsh reality of global costs. Because no matter how efficient your Indian or Chinese factories are, you cannot escape geopolitics.
No, you can't. And that geopolitical reality absolutely crashes into Autoliv's balance sheet here. They announced a major revision. Autoliv raised their 2026 gross headwind from raw materials from a previous estimate of $30 million all the way up to $90 million.
A $60 million unexpected hit to their costs.
Yeah.
And management was very explicit about the cause. This downgrade is directly linked to hostilities in and around the Persian Gulf affecting global energy markets.
Oh, wait a second. Autoliv makes safety belts and airbags.
Yeah.
They aren't, an airline.
Right.
Why does a conflict in the Persian Gulf suddenly cost an auto parts supplier $60 million?
It comes down to the fundamental chemistry of an airbag. Autoliv buys finished components, sure, but those components are deeply reliant on petrochemicals.
Oh, I see.
Yeah, an airbag isn't made of cotton. It's heavily engineered nylon and resin. A seatbelt is synthetic textile.
Ah, so when the price of a barrel of crude oil spikes because shipping lanes in the Middle East are threatened, that cost works its way through refineries, becomes more expensive petrochemicals, and eventually hits the actual price of the nylon thread used to sew an airbag together.
Exactly. And management noted there is typically a 3 to 6 month lag in this process.
Okay, so a delay.
Yeah, the oil price spikes today, but it takes 3 to 6 months for that inflation to physically hit the purchase prices of the plastics and textiles that Autoliv buys. They also noted that commodities like helium, aluminum, and steel are being indirectly affected by these broader supply chain disruptions, too.
Man, everything is connected. But here is where the story doesn't quite add up for me. Their raw material costs just unexpectedly jumped by $60 million. Yet CEO Michael Bratt completely reiterated their full-year adjusted operating profit margin guidance of 10.5 to 11%.
You did.
I have to play devil's advocate here. Because every single company promises, quote-unquote, internal productivity when costs spike.
Sure.
And it usually just means quiet layoffs or cutting corners on quality. Did management give any concrete proof they can actually absorb a $60 million hit without hurting the product or the bottom line?
It is a bold stance, I agree, but they detailed a highly specific two-pronged mitigation strategy. The first prong is commercial price recovery. Autoliv has contractual mechanisms in place to pass these inflationary costs onto the automakers.
So it's like, hey, Ford, hey, Toyota,
Yeah.
our nylon costs more now, so your airbags cost more.
Yeah.
I imagine those are pretty brutal negotiations.
Oh, they're very tough conversations. And there is a timing delay. Autoliv has to eat the cost today and recover it from the automaker tomorrow. But the second prong is where they actually control their own destiny, which is aggressive internal productivity. And it's not just corporate speak for layoffs. They are relying heavily on factory floor digitalization.
Okay, but how does digitalization actually pay for a $60 million spike in nylon costs? Are we talking about, like, AI replacing human hands?
Not replacing them, no, but making the entire physical process radically more efficient. We are talking about automated vision systems that use high-speed cameras to inspect the stitching on an airbag in real time.
Oh, wow.
Yeah, catching a microscopic error before the entire unit has to be scrapped. And we are talking about predictive maintenance algorithms that monitor the vibration of an inflator assembly machine, fixing a bearing before the machine breaks down and halts the entire production line.
So they're just squeezing out every drop of waste.
Exactly. By minimizing scrap and maximizing the uptime of their machines, they plan to manufacture the products so efficiently that the operational savings offset the higher cost of the raw materials.
That mitigation strategy requires absolutely flawless execution on the factory floor.
Yeah.
And it assumes the geopolitical situation in the Middle East doesn't drastically worsen.
Which is a big assumption.
It is. If oil spikes further, that $90 million headwind could easily become $150 million. Let's see if that efficiency is actually showing up on the balance sheet, because looking at the Q1 profit numbers, there's another fascinating contradiction.
Yes, the profitability puzzle of Q1.
Yeah.
Because on one hand, Autoliv's gross profit actually went up 10% in the quarter. Management attributed this directly to that labor productivity we just discussed, favorable foreign exchange rates, and just the sheer volume of higher sales. So making the physical product was indeed more profitable.
And here's the catch. When you look further down the income statement, adjusted operating income actually fell 4%, down to $245 million. And the adjusted operating margin dropped by 1 full percentage point to 8.9%.
Right.
So gross profit is up, but operating profit is down.
Yeah.
What ate the difference?
Well, a few specific things. They faced lower R&D reimbursements due to the timing of some specific customer development projects, and they were comparing against a prior year quarter that had this unusual one-time income boost.
Okay, so some accounting timing stuff.
Yeah, but there was also a notable drag from international trade policy. They reported a 40 basis point drag, meaning nearly 0.5% wiped off their operating margins that came directly from unrecovered U.S. import tariffs.
Oh, so bringing components across the border into the United States cost them more than they anticipated.
Exactly. They recovered about 70% of their U.S. tariff costs, but that was much lower than last year. And management explicitly linked this delay to the implementation of the new U.S. administration's Import Adjustment Offset program.
Bureaucracy.
Basically, the bureaucracy is taking longer to process the offsets. They fully expect to recover those outstanding tariffs later in the year, but in Q1, it hit the bottom line.
It's a perfect example of how policy changes in Washington physically impact the balance sheet of a manufacturer in real time. But the number that really jumped off the page at me was the cash flow.
Yes, the cash flow.
Operating cash flow was a negative $76 million for the quarter. Now wait, if you're analyzing this business, seeing negative cash flow usually sets off major alarm bells. Why are we giving them a pass on burning cash here?
It looks scary on the surface, I know, but this negative cash flow is actually a symptom of a very good problem.
A good problem.
Yeah, CFO Monica Grama broke this down on the call. The negative cash flow was caused by a massive temporary $349 million working capital swing. Here is what physically happened. Autoliv had incredibly strong, record-breaking sales in the month of March, right at the very end of the quarter.
Okay, so they manufactured the airbags, they shipped them to the automakers, and they officially booked the revenue on their income statement.
Right, but the invoices haven't been paid yet. The physical cash hasn't arrived in Autoliv's bank account. When you have a massive surge in sales right at the buzzer of a financial quarter, your accounts receivable explode. You've spent the cash to build the product, but you haven't collected the cash from the customer yet. and that temporarily drains your operating cash flow.
Oh, I get it. It's like selling a bunch of expensive furniture on layaway on the last day of the month.
Exactly.
Your sales numbers look absolutely amazing, but your actual wallet is completely empty until the customer starts making the payments in April.
That's exactly it. It's a timing issue, not a fundamental flaw in the business model. Because of this, management was highly confident in reiterating their full-year target of generating $1.2 billion in positive operating cash flow. The cash is coming, it just hadn't crossed the wire by March 31st.
And because management knows the cash is just delayed, not lost, they are keeping their foot on the gas with capital allocation. They aren't panicking and hoarding pennies. They are moving full steam ahead on both rewarding shareholders and inventing the future of their industry.
Yes. On the shareholder front, they paid an 87-cent per share dividend, returning $65 million to investors. Now, share buybacks were temporarily paused during the quarter, but that was for a very specific procedural reason.
Right, they were in a restricted period because of multiple financial filings and the transition to the new CFO, Monica Grama. You literally cannot buy your own stock when you are undergoing major executive transitions like that due to strict insider trading regulations.
Exactly. But they were adamant that the pause was purely procedural. They remain fully committed to spending $300 to $500 million in annual share repurchases all the way through 2029, drawing from a massive $2.5 billion authorization.
Wow. But returning capital to shareholders isn't the only way they're allocating resources. And this brings us all the way back to the hook that started this whole deep dive.
The innovation.
The innovation.
This is where Autoliv is actively pushing the boundaries of their core competency. In this quarter, they officially introduced their first commercially ready airbag for motorcycles.
Which is wild to think about.
And they went even further by rolling out a complete wearable airbag solution for riders of commuter scooters. They were specifically showcasing it on models like the Yamaha Tricity 300.
We always think of an airbag as something built into the architecture of the vehicle, but they're moving from protecting the box you sit in to protecting the person directly. It's essentially like wearing the car.
Yeah.
But how does that actually work? Like if you aren't plugged into the vehicle's computer, how does a jacket know you are in a crash?
It requires completely autonomous safety technology. The wearable garment itself is packed with sophisticated accelerometers and gyroscopes.
So it's tracking everything.
Everything. It is constantly monitoring the rider's position, speed, and lean angle hundreds of times a second. An onboard AI algorithm is trained to recognize the exact physical signature of a crash, the sudden deceleration, the unnatural rotation of a fall.
Wow.
When it detects that signature, it fires a localized inflator cartridge, deploying the airbag around the rider's neck, chest, and spine in mere milliseconds, long before they actually hit the pavement.
That is incredible. But, beyond the life-saving potential, there is a very clear financial strategy driving this. This isn't just an R&D vanity project for them.
Not at all. Autoliv has outlined a long-term revenue growth target of 4 to 6%, and they've explicitly stated that 1 to 2% of that overall growth will eventually come from what they call mobility safety solutions, targeting entirely new markets.
Right, because they recognize that if they only sell to car manufacturers, their growth is ultimately capped by how many cars the world decides to build.
Exactly.
By creating wearable airbags, they are detaching their growth potential from the limitations of the traditional four-wheel passenger vehicle market. They're opening up a completely untapped total addressable market of hundreds of millions of two-wheel riders globally.
And as urban centers become more crowded and micromobility options like scooters and e-bikes become more prevalent as commuting tools, the demand for non-traditional, untethered safety solutions is going to skyrocket.
It really is. So looking back at this earnings report, Autoliv is serving as a masterclass in navigating a wildly complex global landscape. They are defying a shrinking global auto market by aggressively capturing domestic share in China and riding the wave of massive regulatory-driven safety content increases in India.
All while playing high-stakes defense against geopolitical oil shocks in the Persian Gulf and, navigating the bureaucratic delays of U.S. tariff programs.
Right.
They are managing massive working capital swings driven by sheer sales volume and confidently plowing money back into both shareholder returns and groundbreaking autonomous safety technology.
It really shows you exactly how macroeconomics, factory floor automation, and global trade all physically intersect in the creation of a single seatbelt or airbag. It's never just a piece of nylon. It's a global web of energy prices, government policies, and engineering.
It truly is. The physical economy is endlessly interconnected.
Absolutely. Well, before we wrap up this deep dive, I want to leave you with a final provocative thought to mull over. We started by talking about taking the safety out of the car and putting it onto the motorcycle rider. But if wearable airbags become the mainstream standard for motorcycles and high-speed scooters,
Mhm.
how far could this go?
It's an incredible avenue to explore. I mean, how might this technology eventually transfer to other highly vulnerable road users?
Exactly. Think about cyclists navigating massive, chaotic city intersections, or people riding 25-mile-per-hour e-bikes to work, or even just pedestrians in increasingly crowded urban centers. As the battery technology gets lighter, the sensors get smaller, and the inflators get cheaper. Could the future of city micromobility depend entirely on the clothes you wear? Could your winter jacket or your backpack eventually deploy an airbag if a distracted driver jumps the curb? If automotive safety is no longer confined to a metal box, the limits of where it goes next are entirely up to our imagination. Something to think about the next time you strap on a helmet or click a seatbelt.